May profits be upon you. I hope you're enjoying your weekend. Let's take a look at USDJPY, the US dollar against the yen. And let's see what we got coming in the week ahead. Let's take a look at the weekly. Why am I on the weekly? Because we have reached a weekly point of interest. Look at this, this supply zone. I was going to call it demand zone. We have a supply here. All right. I start my actual supply zone here and can refine it right on this time frame to here, right? You see how price came up, tapped it here, mitigated it already once, all right, and then fell from there, all right. And then we were visiting it. We take this high out, take it for liquidity, all right? And that's something I want to see when I'm entering in a zone of supply. I want to see liquidity swept on the way in. I want to see a fair value gap be filled, all right? This one already filled the gap that was here. Actually, there was no gap here, all right, because price moved efficiently from here, came, tapped, and then here we go, sweeping that high. All right. So we are in a very important, a very strong zone of supply. You see how price left here the first time, right? And then the second time, spent a lot of time away. Here we are again. Do we expect price to fall again the same way as fell the first two times? I'm not sure we should be expecting that, but we should be expecting deeper penetration, which we already are. Deeper penetration into this supply zone. Let's look at the daily. All right. You don't just want to snap off trades just because it enters a zone of supply or demand. You want to take a good look at the price action. All right. On the daily, what do we see? Price is moving very, very aggressively. Let me show you something on the old RT money meter. Look at the yen. Last week, it was at minus 4.34. All right, this is over 15 weeks, and that's the score. All right, that's the score you give it. All right, the rate of change. All right, it got weak, and it's gotten weaker since. All right, and the U.S. is always in the middle. All right, because everything's weighted against the U.S. Right, and that's not good. And the fact of the matter is, the yen next week, there's no news for it. They don't have any interest rate decisions or anything like that coming up next week. All right, so I don't see that changing fundamentally. I don't see that changing much things. Now, on the other hand, US dollar is going to be, there's a lot of news coming out next week. Friday, the Michigan sentiment. We have the Thursday, there's going to be jobless claims, and like Monday and Tuesday, there's going to be the Fed chair talking about interest rates and the policy it's going to have with the hikes. So there's going to be some things going on there. So there might be some potential volatility with this market. All right. So do we expect price to zap on back down here and then come back up? That's a tall task. That's a tall task and a tall ask. All right. What we want to make note of is what's happening in front of us. All right. We see the last break of structure. Come on, man. What is that? What the heck is going on here? All right, hold on. I'm picking the wrong things. This is my fault. All right. We have a break of structure here. All right. Price made a little higher. Is that a high? Is that a higher high? Actually, this was the high. Okay. My bad. All right. So we made a higher high here. Broke structure to the upside. All right. You would expect some kind of pullback. All right. And there's a lot of, come on, man. There's a lot of, the imbalance in this move. So at some point, you expect price to come and close the fair value gap here. down into this area. All right. And it would make sense from a Fibonacci perspective that price would come back down in that area, because if you measure the move if you measure it from the beginning of the move to the end of the move, you want to measure off the pullback, and right around this area is the golden ratio, right where we see some structure here. So if price comes down here, it would make sense because we're at the 62% mark, right? So that can happen, but let me be very clear with this. All right, you don't want to just snap off trades because price is in a zone. All right, you want to get confirmation. All right, this one is especially important because it's already entered a mitigated, is entered an already mitigated order block. All right, this supply zone has already been mitigated. All right, so what you want to see, what you want to wait for is confirmation. I'm going to show you a high. You want to see a high made, a pullback, another high that breaks that high, and then a break below that swing low. This is your impulse leg of structure. After a break of structure here, you want to see what? A return to impulse. All right, up in here, somewhere in this impulse leg. You want to see price return and then come on down. All right, that's what you want to see. I can't stress enough what are the most important points of this. This is your two most important points. You want to see a hybrid, the high being broken, and that structure break, that market structure break here that indicates that price is shifting from bullish momentum to bearish momentum. It has an intent to go down lower. You wait for the pullback, the return to impulse, the return to the originating impulse, and then you just take it on down, take it on downtown. But if you just want to snap off a trade, you can if you want to. All right. Now, on this level, as prices making a higher high, higher low, higher high, higher low, higher high, higher low. As price is doing that, as soon as it breaks one of those swing lows, like this one right here, as soon as it breaks there, that's when your antenna should go up. All right, because you want to see some follow through after that. All right, you want to see, you already see it broke the high. You want to see that swing low broken. If it breaks this one, and this one, that's even better. As it comes back up, you know, the deeper it goes, that the more intense, the more it confirms the intent of price to go lower. You wait for a price to pull back up, and you take that thing, take it on down to Chinatown, okay? But that is a confirmation entry. All right, my entry is going to come on the 15-minute. This is where I'll be looking for that transition. Come on, man. This is where I'll be looking for the transition of price. All right, we already have a break of the high here. That's good stuff. All right, and again, this is what we're looking for on the 4 hour. This break of structure. We can get chalk here now. Chalk is the same situation, just on a lower time frame, and it's not a confirmation entry. This is a more aggressive entry. You wait for that high to be broken. You wait for that low to be broken, and then you wait for the return to impulse. Okay, it's the exact same thing, just smaller, and it's substructure. All right, it's an earlier indication that price is shifting from bearish to bullish momentum. And in this case here on 15, here is your break of the high. And where would I be looking for that low? Where would I be looking for that low? Right here. Right. As soon as it does this, my antenna's lifted and I'm looking for price to come back up in here. Come back up in here. All right. It could turn right here. It could turn right here, or I'll wait for it to come up there. Either one. All right. It can come there or it can come there. Either or, I'm going to take one of those. That's a chalk entry. It's an aggressive entry. It's not like the confirmation entry. All right. It's more aggressive, but it's still pretty doggone highly probable. Anyway, so to recap, if price is going to come back down, you know, after this break of structure, this price is going to come back down here and fill in all of those what do you call the imbalance into this this zone of demand, then you know we can take this we can take that short. We can take that short from here as long as we see price roll over and come down in the fashion that I already pointed out. And I want to also show you that even on the weekly, it does the same thing. It's because price is fractal. All right. What do we see here? What do we see here? Same situation. A high is made, a low. This one, this high is big, is higher than that one. So that's why I'm going up to this one. Got a high, doggone it. High, swing low, higher high, breaking that high. A low that breaks the swing low, a return to impulse, right, chow. Take it down. I'm not making it up. I'm only going by what price gives us. Okay. So we'll look for that here. If price just continues up higher, then, you know, we don't have a trade. We don't have a long yet because we're late. You know, you should have caught your long down here. You know what I mean? You wait for the pullback when it comes, and it will. All right. After every impulse comes the correction. Just wait. That's it. I hope you found this video helpful. I hope that we can take this nice trade together because I'm looking for at least 100 pips on it. All right. At the very least. All right. And I want you to be careful. I will see you in the very next video. Check out the video, one of the 2 videos that I have on your screen right now. And do yourself a favor and learn something. I'll talk to you later.